Oh, hey, over there. Do we have sound? Hang on. I don't think so. Do we have sound? Yeah, we do have sound. All right, cool. Whoa. Anyways, I guess that's. I feel like I'm a vampire. I'm a vampire. All right. Good morning, everybody. It's a Monday. Yeah, boy. Favorite day of the week. Woohoo! Woohoo! Wow, I don't have a high voice today. Yeah. Favorite day of the week. It's Monday. That means we're allowed to trade again. Let the beast out of the cage. Super excited. Thank you for being here. Thank you for being a subscriber. We are now approaching 14,000 subscribers. So I'm very excited to have everybody here. Thank you for your loyalty and respect. Let's get on with it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. I can't run that anymore because if you play any music on YouTube now, someone claims it's their music. Even if it's royalty-free music, they claim it's theirs and blah, 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 blah. And rocking the pompadour for you today, too. So anyways, hey, my name is Wayne. I'm a currency trader. I've been doing this a long time. Feel free to ask questions, get involved. My overriding goal is help you put together trade plans. Teach you how to put together your own trade plans. Read technical and fundamental analysis so that you can at least take trades that you believe in. And if you're right, you'll make money. If you're wrong, you probably won't get a lot of trade setups. That's what technical analysis tells you. The price and the time. Yeah, it will be an interesting week ahead. Not too crazy, but just enough. So I'm really looking forward to it. Okay. I'd like to thank our sponsor, Traders Way, for making all of this possible, bringing this webinar into your life. If you go to tradersway.com over here, you can click Open Demo Account. Like it says right here, join us in less than 1 minute, right? That's all it is. That's it. See how fast? Now, you can have a variable account, a fixed spread account, an ECN account, or an MT5 account. It's your way, Trader's Way, with Trader Wayne. Now, what I propose we do this morning, or at least start with, is on the Forex.Today site. If you go on calendar, you'll get this page. Nice. And this is the calendar for the week. One of the things I like to do off the bat is just look at the highest, most important ones. Okay. So tonight we got the RBA meeting minutes. Fed, check your email. You signed up exactly 1 year ago to the day, so your account is expired. I responded to your email, though, about an hour ago. Cool. So anyways, RBA meeting tonight, which is Tuesday morning for everybody else, but for tonight in America, we're looking at the RBA decision and statement. I highly suggest you read the statement. Now, let's talk about Aussie for a second. Over the last day, over the last 24 hours, there's been a lot of rhetoric coming out of Washington, D.C., pointing fingers at China for creating COVID. Whether it's true or not is completely irrelevant. I think it's a brilliant political strategy. Because what he's going to do is dominate the discussion between now and the election. And he's going to say, you know what, the Obama administration had 8 years to deal with this and they never did. Hillary Clinton had years and years and years to deal with this problem. They never did. He's like, I'm not afraid of China. I took care of China, right? I've tariffed them. We did the trade war. We got a better deal. And now It's this COVID thing is their fault. I'm going to punish them because I'm president of the United States, greatest country in the world, right? And he's going to come out and dictate this language. And then the Democrats or us, whoever, Biden, I guess, just by choice has to say, no, that's not true. That's not true, whatever. But he's taking the lead on that. And it's a brilliant strategy. Even if it's not true, and I don't know. I don't quite buy into it that it escaped out of a lab in Wuhan, which is actually Wuhan because the W is silent. But anyways, whether it's true or not in politics is irrelevant. So everyone will be talking about whether Trump is right or whether Trump is wrong, but they're talking about Trump, not Biden. So anyways, that's kind of interesting. Well, what is the impact of that? Well, if there's more tariffs on China to punish them for leaking this out, not handling it properly, and all this kind of stuff, is that good for the Chinese economy or is that bad for the Chinese economy? It's bad. So you probably don't trade the Chinese currency directly, but what could you trade? Who else is that bad for? Who else is the loser on this one? Who else is the loser if this goes down poorly for China? Australia, thank you. And hence, we go full circle. You're not going to hear anything in the statement about that because this is current events, but you should see where the RBA thought they were a few days ago as far as the economy returning, China coming back online. Maybe everything was looking good for a little bit there. Once the Chinese economy is back at near capacity, maybe demand for Australian exports will go up, right? Well, we'll see. Yeah, I see that, Anthony. That's what people would call the what the liberal media or something. All right, let me grab my coffee. Hang on. Yeah, boy. Thank you for your patience. Oh, need my coffee. Cafe. So, anyways, make sure you keep your eyes open for that. Yes, if something bad happens to China, it affects the Australian dollar. Okay. The two major exports out of Australia are iron ore and coal. You can burn the coal and create electricity by firing up a power plant with your coal. It happens to be clean coal, so China really wants this clean coal because they're not willing to convert their coal-fired power plants into something else. So they're like, well, the best we can do is burn dirty coal or clean coal, so we'll buy as much clean coal from Australia as possible. Now, they also have iron ore. So if you melt iron ore into a liquid and sprinkle on some coal, which is carbon, you get steel. So if you want to make steel in China, you can buy some iron ore from Australia. Okay. So, anyways, yeah. So if China's economy slows down because we're in yet another trade war between Beijing and Washington, then that's not good for the Chinese economy. That slows down demand because of a slowdown in economic activity. And if there's less demand for things like iron ore and coal or Shiraz, for that matter, then Australian exports go down and the economy slows. Now, other people say, well, yen to an extent and all that stuff. Well, there's going to be a winner here. Okay? So if China slows down, but demand stays strong in the United States for stuff, then maybe South Korea benefits. Maybe Japan benefits. Okay? Well, that's why I'm here. Copa! German Copacabana. The winner will be Europe. Okay. I like pure mathematics. That's so optimistic. Nothing can save Europe except Europeans. Good luck with that. All right. So the next, so on Wednesday, monetary policy meeting minutes out of the Bank of Japan. Once again, I suggest you read that. Okay, Thursday, BOE, BOE, BOE. You get all these decisions, and you get a summary, and you get meeting minutes. Oh my gosh. So all of this needs to be your focus on Thursday. I literally would like you to read the statement. Download it, yada, yada, yada. Okay? Okay? Cool. And then Friday. NFP, kitty cat jobs. Candy jobs. But yeah, NFP obviously going to be the anchor of the week. Very cool. But you know, like Thursday's got lots of love for the pound. I don't think the monetary meeting minutes out of the BOJ is going to move anything, but you should still read it. Okay? At least, you know, will it make you a better trader? Not necessarily. Will it move the market? Not necessarily. But it will make people better looking than you. Look up and look up to you. It'll make people better looking than you impressed. Like, oh really? That sounds smart. So anyways, and then of course the RBA stuff. Should be a good week. So maybe we should talk Aussie yen. This is us discussing Aussie yen on Friday. Knowledgeable. Well, remember, beautiful people will never read the Bank of Japan monetary meeting minutes. Why do they have to? They're good looking. So anyways. It's a little off topic right now, but someday. All right. So see what we're talking about? We have resistance drawn here. And we're saying if it rolls over on a bigger time frame, it's going to go to down, up, down, right? Down, 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 up, down, 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 up, down, 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 down. So this is just sort of in here, the birth, if you will, because here's your resistance line. Okay. And what we're talking about in this blip on Friday was this is a sell. However, the sell zone is rising. And what we want to see eventually, if you're a bear, is the sell zone falling, not rising. So what we're talking about here is down, 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 up, down, 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 that kind of stuff in the future, okay? For this price to roll over. Cool. Copacabana. By the way, don't you just love this euro dollar? Wowzer, huh? Isn't that interesting? Wowzer, nowheresville. All right, so we were going to look at Aussie yen. Aussie yen. Do I got Aussie yen here? No, I got pound yen. Which I can see there's a break-even trade there. All right, Let's go to yens, I guess. Prince, the number one reason to do it is because 95% of traders will be unwilling to do it. And my kind of thought process in the beginning is maybe 95% of retail traders lose their money because they're not willing to do the work. So I would just do it knowing that almost everyone, even in this chat today, will still not do it. They log in, they're like, I wonder what my mentor is going to tell me. What advice will my mentor give me today? You should read the meeting minutes from the Bank of Japan. You should read the meeting minutes from the Bank of England. You should read the meeting minutes from the Reserve Bank of Australia. Oh, that's really good advice. I'm not going to do it. So if I was you, I would say 95% of people that even get the advice will still not do it. But I want to make sure I'm the different one. I'm in the 5% that will do it. And maybe it's that same 5% that becomes successful in the future because they're willing to do that kind of work. And by the way, it literally takes probably 10 minutes out of your life. It's such a small amount of work and such a small commitment, but yet the vast majority, almost nobody is willing to invest the time, even if it's only 10 minutes. So I would be the one that does it. That's it. So will it make you a better trader? No. But it's what a professional would do. So fake it. Pretend you're a professional. Read it just because. So here's a little psychological strategy. When I do stuff like this, I usually do it on the weekend. I sit down in the back deck, the sun rising up over the lake. I have a beautiful cup of coffee, warm, and it just smells gorgeous. And I light up a beautiful cigar that's been aging in my humidor for 2 years. And I light it up, and I start going through my research. And I'm rewarding myself in a way. I'm doing my work, but I love to do it. It's not a burden. And I feel really good about myself. Like I am a currency trader. And it's funny because I still get that feeling like how good this is, how lucky I am. I still get that feeling like I'm sitting out here like, I know it's been 20 years, but I'm still like, this is cool. I'm a currency trader. I need to know these things. I need to know what's going on in the world. And it's interesting. I don't know. That's how I am. So if I were me, that's what I would do. Okay? And you guys probably know the story above my office in my older home. So I used to have these 2 glass French doors that led into my office. And it was really sweet setup because I had a patio for the office, which this one does too. But that one had a full-size kitchen. This office only has a half kitchen. But the other one had like oven and everything. Like you could bake bread. Had a full-size fridge. So it was a pretty kick-butt office, and it had coffered ceilings and everything. And so my idea was that I was going to have something carved over the header of the French doors going into my office. And I thought about it, and I had this idea like, well, I'm willing to do the work that 95% of people won't do. So I looked it up, and I remember this quote from somewhere, the work will set you free. I said, well, that's it, right? So I looked it up and had it translated in Latin, and I was going to have someone like carve it into the mantle above the door. And then I found out it's what they actually had over the gates of Auschwitz. And I'm like, oh man, would that have been an epic fail, huh? To have like the everyday walk through the gates of Auschwitz as I sit down. So anyways, I'm telling you, I got close to having that done. So anyways, I backed away. But the idea is there, guys. What will make you successful in Forex? Maybe just start doing what 95% of people are unwilling or incapable of doing. Just doing it. Just having a positive habit that a professional has. And the way I deal with it is I try to set it up so I look forward to it. So I can spend 45 minutes, have a cigar, have a nice coffee, go through the research. I read Barron's very quickly, and I'm done. And it's a great morning. I move on with my life. That's what I would do if I were me. Okay. Oh, is that right, Mr. Heifel? And what did you think? You're like, well, I might be 9.5. So, anyways, I hope it was worth your time. All right, so let's take a look. If you're a bull, how are you going to play this? Okay. So one of the things we talked about last night is wanting to be a bull, but this idea that bulls don't like lower lows. So if you zoom in, and I'll do this as much as possible, the line I have here is Friday's low. Okay, that's plan A. If we drop below that as a bull, you're not going to like it. There's still one more chance, but you are not going to like it. And in fact, you're probably done for the day. This is what we said 15 hours ago. The second line we picked up is that one. Okay. So we have two places if you're a bull. Okay. We said if it breaks that one, let me do this one in black. We said if it breaks this line, you should probably take a walk. And we're basically talking Asia Open, London Open. So we said if we breach this line, and we have it as 69.23, if you break that, take a walk. Okay. Oh, that's interesting, Mr. Highvolt. He says he has an engineering mindset, not an economist. So here's the interesting thing, because I've gone pretty far in economics. And the more you dive into it, the more it becomes engineering. And it's really interesting because we're talking about models based on, calculus and um, and on top of that, you're trying to predict human behavior. So when you put in behavioral finance into your economics, which are two different studies, unifying them gets pretty interesting too, because now you have to create models on that. And so the deeper you get in, the much more of science it becomes. It gets very, very complicated. And that's the part you'd probably like better, because it does require an engineering mind. In the beginning, you got to understand the basics. Like, it's hard to teach someone, like, if prices go low, you'll want to buy more. Why do I want to buy more? I like nice things, right? And you have to really, so you start here and you break all the basics down for maybe the first 2 years of studying economics. But once you get the what makes someone buy, what makes someone not buy, when things are scarce, what happens, when you get past all of this stuff, then it becomes, all right, let's do the calculus to predict future. And that's the part you'd probably like better. Okay. So anyways, let's go back to this. So 15 hours ago, we said if we breach this, you should probably take a walk if you're a bull. One of the reasons is we know this is a bearish setup. Okay. Now, plan B 15 hours ago was if you get down to here, it's sort of your Alamo. If you're a bull, it really does have to go up there. Otherwise, it becomes technically bearish. So right now, if bears sold here, they're wildly profitable. And here's what they're thinking for the future. And that might be true. We just don't know. But that would be one particular model that would favor a bear. And they're going to look left and drag this over. And, that's what they're going to do. And you just know it because you know how to trade. Now, if bears are wrong, bulls will enter one more time and do this. Okay? Any lower than that, we go range bound. And nobody wants that. And so let me show you what I mean by range bound. Okay, you see all this noise over here? Okay? And then either this or this. And in that scenario, nobody breaks, no lower lows, no higher highs, and we do this for a bit. And nobody wants that, right? Sam B says, why is 69.23 a cycle level? It's not a cycle level. It's a previous lower low. So how I started this conversation was a bull doesn't like a lower low. Right? Bulls don't like patterns like that. Bulls instead want to see higher lows. So at some point, we're looking at a line here where if it goes lower than this fat pink line, it's just time to walk away. The conditions are not ready yet. You see? Yet. You're still a bull, so you believe in your long-term bias, you believe on the longer-term technicals, you believe on the longer-term fundamentals. It's all part of it. So you're like, okay, well, I'm going to buy it, but it just says not now. So when's a better price? Well, if it falls further, you're looking at this one. And just by the way, there's multiple reasons for it. Okay? Any lower than this, then your uptrend is dead, which makes you vulnerable to a downtrend. Or your uptrend is dead and makes you vulnerable to a range. Either way, as a bull, you need to back off. Okay? Like completely back off for a bit and reassess. Okay? It's sort of like you're the general on the battlefield. Every once in a while, you got to call your troops back, regather, and do a counterattack. Okay? Cool. Understood? So 15 hours ago, we're like, if this breaches, take a walk. Well, it breached. And if it does breach, this is plan B. Cool. So now it all comes down to whether a bear is going to sell the retest to 69. Okay, if it does this, bears are probably going to take a good shot. This is probably an exit, not an entry, which means bulls probably took profit here, but a bear certainly would be the one selling here. And if that happens, get ready for your lower low. Cool, right? Nice! We got the nicest potassium. Our potassium's better than causing potassium. All right. So what do you want to do with this? We've had some down on this for a while, huh? But at the end of the day, still not very trendy. It's out. Right? It's out, like elevators. Elevators are out. So anyways, this is still more bearish than bullish. There's even a little bit of a fill the gap, but I think we're reading into that. But I wouldn't call this bullish. Okay. So now if you make a decision here, what are you going to do? Well, if you've decided to be a bear, you only sell lower highs. So where's your sell going to be? Well, on Friday, we knew the sell zone would be a pullback to 76. Oh my God, 76.99 right now. We actually wanted to go a little higher, but well, be as picky and as choosy as you want. Check that out. Okay, right here. Down, 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 up, up. Be as picky and as choosy as you want. Some people might see 76.19 as the number. Some people might just see 76, which is right here. We only have 2 lines suggesting this being resistance. Okay? Whoa. Whoa. Yeah. So anyways, you might want to pay attention. If you're a burr, you think risk off, because of a trade war between the United States and China, then there you go. So now, if I were me, I would be like on a fiver. Any thoughts? Good, bad, helpful, confusing? Oh, stiff as can be. Cool. Thank you. Thank you, Ron. All right. Guess we'll do this. Would you say this is a bullish trend right now or a bearish trend? KG, if you didn't understand what I just said, then there's no trade. If you're asking what I just explained as a buy or sell, I'm not going to answer that because you're missing ginormous pieces. So just cool off, man. If you don't understand that, stop trading. Give me a few weeks. Okay? Give me a few weeks to help you out. Well, I'm not using the moving averages for this one. Okay. So like for example, there are many different ways to measure this. I'm gonna brag with my Harvard knowledge, like that guy was laughing at me last week. You're just trying to brag because you're so smart with your Harvard stuff. I'm like, dude, this is 7th grade math. All right. So we were rejected from the average price over time. Okay. And when you measure the rise over the run, which is the slope, this predicts more down than up. Okay. So a regression channel is saying it's based on the slope of the average price over time. This is more bearish than bullish. Another way of doing it is higher high, lower low, lower high, lower low, lower high, lower low. Okay? So I think if you were using price action or a linear regression, you would say you are a bearish. Okay. And you'd be looking for this. Wait, I had the wrong one. There we go. But notice these are monthly pivots. So if you were a long-term bear, you would have sold here in April and you were done. And you would have sold here in May and done for the entire month. What'd you do in May? Oh, I sold it on May 1st. That's it. You're done. Sold it at 17.50. So if you're still a bear, now on smaller time frames, you're going to look for like weekly moves and daily moves that look like this. So if you are a bear for whatever reason, maybe it's just simply this. Okay? Cool. If that makes you a bear, then you sell only, you never buy. Okay, so 1, sell only. 2, where do you sell? Resistance only. That's it. So you're done planning for the month of May already. That's so last week. So now on smaller time frames like weeklies or dailies, all you're looking to do is sell at resistance. Okay? Remember, these charts don't tell you. You've analyzed it and made your decision. So let's take a look. On the daily, okay, tomorrow's sell zone is currently here. Okay? So somewhere between 17 and more like 17.25. There should be a new short for you if you're a bear. Okay? You're thinking something like this if you're a bear. Okay? Where's your concerns? You got serious concerns around here. Okay? No, grind, it's not for traders' way. Commitment of Traders report comes from exchanges. So like the Chicago Board of Trade. Okay? So what you do the rest of today, for example, is you ask yourself, is this resistance? Is this resistance? Is this resistance? So one of my favorite forms of resistance is role reversals. So I'm definitely already in on that mentally and emotionally. Okay? See what I'm talking about? So my plan for today is, or my strategy for today is something like this. So now I have to wait as I approach 117.000, I will drop from a higher time frame to a lower time frame, and now I'm all tactics. I'm kicking down doors. I'm killing bad guys. Okay? It's not a strategy anymore. It's tactics. Any thoughts on that? Okay. So the concerns, like I said, is this area here. You can go off the wick this time if you want. So there are some concerns there. Can you draw the oscillator? The oscillator is worried on this 4-hour because we've gone 12 hours without a lower low. So the oscillator is now rising, well, is getting ready to rise. We haven't made a higher high either on this time frame. Okay? So what we'd be waiting for as bears now is somewhere soon we need to make a lower low. So you get a scenario like, right? And of course, ultimately, we're going to need to get through this if you're a bear. But that's not clear yet. So the shorter trade plan really is sell just above 17 or at 17. Target is really 16.50, but we're hoping to get down to 16. If so, we're definitely making lows, and there's definitely much more bearish than bullish. Yeah, but it's not FX Blue data. It's commercial data grind. It's data off of the exchange. Oh, unless you're talking about how many people are long euro dollar and short dollar and stuff. Well, that's from the liquidity providers. Okay. Remember, brokers have liquidity, right? So you have a broker and they have clients. Client, client, client. Okay. And they're not necessarily taking this buy order and matching it with this sell order, because even big brokers don't have enough clients to always offer that everyone at the exact second you want to sell, right? So what they also have is liquidity provider, liquidity provider, liquidity provider. So you might sell on Trader's Way and get filled by JP Morgan. Okay? And so to get the data that you're talking about, they're looking at the liquidity providers. But remember, there isn't, it's not all data. It's right. It's not like an exchange. The Chicago Board of Trade, for example, knows the number, like volume, because they've seen every trade go through their exchange. So they know the total volume, right? They also know which ones are designated as bona fide hedgers, because they're listed as such. They also know the number of trades made by large institutional investors. We'll call them speculators. Why? Well, because if you make large institutional trades, you're required to report that to the Commodity Futures Trading Commission. So we know that. And then since we know the total volume, minus bona fide hedgers, minus speculators, there'll still be some volume left over. Who is that? Us. Dumb money. So that's how, commitment to traders report is done. Now you're just talking about liquidity provider stuff, but that doesn't give you the full representation of the Forex market. It's just some representation of the Forex market. Okay. CAD to crypto says, can you look at Euro, USD, Turkish lira? Okay. High yield currencies. Oh, my pleasure grind. USD Lira. Okay. What do you think of this? Is this risk on or risk off? Ked says, I hope it falls. There's no hope in Forex. There's only if-then statements. Yeah, that's definitely risk off. Cool. It doesn't become risk on for a very long time. So all you could really do is buy this, but the buying is the easy part. Okay. So for example, if we use the pen here, let's say no lower low, higher low, higher low. So it's just stepping up every day. Okay. Also, oops, don't do that. Don't click that button. This should be set on this template. This. Okay, that's it going up. Or if you want to switch it to more swing bull. Okay. So how do you trade USD Turkish lira? Let's see. You buy, goes up, comes down, you buy, goes up, it comes down, you buy, goes up, comes down, you buy, goes up. So maybe you've already missed this week's trade. Or maybe it'll show up later in the week. New trader says, what about Eurozar? All right. By the way, does that look tradable? These are weekly trades. Do you have that kind of skill? I think you do. Been on it? Okay, let's do a different one. How about this one? KJ says the swap's bad on it. Well, then don't swing it. Day trade it. Okay? So what is this? This is last week's sell zone. This is this week's sell zone. Okay? And on this one, you're earning 2% a week profit. Profit per week, weekly. So let's just call this 100% a year, interest only. What if you ran a fund, accumulated something that paid you 100% a year? Would you buy a bond if you could earn 100% a year? assuming the risk was reasonable. Huh? Would you guys do it? Would that be a reasonable hedge fund to say, well, if things go bad, we'll only earn 100% a year? Right? What do you want daily charts? Okay. Yeah. So I'll show you, for example, I'll open this one up. So I've earned $2.19. I bought it April 27th, which I believe was a Monday. So I sold it on a Monday. Now it's a Monday again, so I've earned $2.19. So I'm going to earn over 100% a year. It's going to be more like, 112% a year. Yeah. I'm up 168 bucks though, so I'm up over 100% already. Okay. So I have like $110 on this. You can see I have 2 trades, 225 margin. Pound yen usually has a little higher margin. So I'm guessing I have $110 invested. I have $165 profit, plus the $2 in interest that's already been paid to me. What do you think of that? Thank you, South Africa. I appreciate you. That's good though, right? It's good math. So one thing I could do later on, let's say tomorrow, I can lock in 100% profit and then never look at it again. Yeah, boy! I can get my yellow Honda Accord. Can you trade your currency? I have no idea. Oh, this is my coaching account, so I don't really pay attention to it. La la la, la la la. All right. Quacha. I don't know. I don't know. Not most brokers. What do I want to do? I guess we could just take a look around the world. Yeah, I love Honda Accords that have towing hitches on the back. Anyways, Aussie down, pound down, Kiwi down, euro up, CAD down. So, CAD down, commodity, Kiwi down, commodity, Aussie down, commodity, pound, euro, okay. Dollar strong, yen strong, Swissy strong. So risk off, risk off, risk off, risk off, risk off, risk off. And of course, the 2 major European currencies doing the opposite. So not amazing trading right now. Well, here's the interesting thing. What do we know? Is euro ZAR going up or is euro ZAR going down? So it shows you that euro is strong relative to the other major currencies, but rand is stronger. So it's very strong. Let's see. You pull your money out of a safe German bank and you decide to send it to South Africa. Is that risky or conservative? Are you removing risk or are you adding risk? New trader. What do you think? You have money parked in a Swiss bank account or a German bank account. And you're like, hey man, I think I'll send it to South Africa. Loan them some money. Yeah, well, there you go. You just answered the question. You're taking on risk. Okay. By the way, thank you for subscribing today, guys, and thank you for clicking the likey thumbs up button. Although only 1/3 of you like today's video and 2/3 of you don't like today's video. But I would appreciate it if you would click the like button. All it does is it tells YouTube that this is quality content. It also tells me you want me to keep going. KG says send it to a Zambian bank. Need some kwacha! What can I get for 2 kwacha? Anything you want. All right, so rand is stronger than even the euro. So you have to decide whether you're a bull or a bear. And if you're a bear, you need to sell at resistance. So somewhere in time, you'll probably want to do that. Thank you, Richard. Looks like YouTube is having a little bit of trouble with the stream today. I got a couple of warnings, which should be coming through. You are not alone. So this is your sell zone, by the way, right? Okay. Now, looking on the daily chart, okay, if you're a bull, you remain a bull. Okay, the real break doesn't occur till down here. So a real bull would stay a bull as long as we're above 20. Okay. So now you go into a smaller time frame and you don't really care about this gobbledygook nonsense. You're going to look at this from a bullish point of view. So I'm going to go to indicators. I'm going to change the bias from bearish to bullish. And if you're going to sell off South African Rand, you're getting ready to do it right now. And as long as you're above here, you're going to be a buyer. So your plan is here or here. So for example, you may be long already, but we already know that a bear is going to try it again. So you don't give up. and then a bull is going to try again here. So you got your plan A and you got your plan B. A, B. Okay? What do you think? Thank you, Anthony. What do you think? KG, I don't pip and tell. Cool, right? So you see how I did that? Step one is always reaffirm your bias. Okay? So if you are bullish on this pair, you're saying, well, this is 1 day candle. So if that's one daily candle, what do bulls do? Bulls buy. What do they buy? Bulls buy what? What do bulls buy? They buy high or low at support, right? So if you measured from here to here to here, this would be about a 38% retracement. If you measured here to here to here, this is about a 50% retracement. So don't you think that that a bull would do something like this? Bulls buy red candles. Bulls do not buy green candles. So if this is the top of yesterday and this is the bottom of yesterday, okay, then that's the general idea. Danny from Massachusetts. What do they call them? Mass holes, right? That's what they call a driver for Massachusetts, a mass hole. Yeah. Well, I know Cambridge. That's all I really know, and I know a little bit about Boston, but I know a whole bunch about Cambridge. Worcester. Cool. Well, the other Cambridge. I'm sorry, pure mathematics. The other Cambridge. Oh, right on. Massachusetts. That's funny too. Yeah, so I go to my cigar bar across the street from the old yard, and I run in there, and you buy like a $20 cigar, but it's almost 50% taxes on top of that. You're like, wow. And there's nowhere you're allowed to smoke a cigar. You're not even allowed to smoke a cigar in a park. Can you believe it? You're like, a park. I'm like, officer, these are my favorite monkey bars. Just arrest the kids. They stink. So anyways, So welcome, Danny. Cool. I don't know when I'll be in Massachusetts again, since I can't travel there anymore and Harvard's shut down. I don't think they're even gonna. I don't even think they're gonna let freshmen live in the dorms in the old yard this year. Like, I don't think I'd go. Like, if I don't get Wigglesworth, I ain't coming to the. I'm not coming to the school, right? Put me in the Weld building, or I'm out of here, right? So, anyways, what's up, Bahamian? One of my best meals of my entire life was at the Grey Cliff Hotel. Super nice people, awesome food, rolled my own cigar, then went into a beautiful restaurant with fabulous, like, doily tablecloths and everything, and smoked it right on my table. And then they brought out the fabulous seafood cioppino. Oh my God. Love the Bahamas. Well, I love the Great Cliff Hotel in the Bahamas. You can take all the cruise ships and shove them. But yeah. Cool. So welcome, Bahamas. A friend of mine has a hedge fund domiciled in the Bahamas. All right. La 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 la. So we did Rand. We did Lira. We've done some yens. We did an Aussie. We did a scan. I guess. Cool. Yeah, so I think we covered this one, right? Yeah, we did this one. This is the big drop. This is the one we did on Friday. Is that video still up? Forex.Today? Yeah. Right? So we're saying sell off 70 and sell rallies, sell rallies, sell rallies. If you're a bear, of course. Now, we've been watching that 70 line for probably a week. I probably won't do cross pairs today. Yeah, I don't know what it is because I see it in the stream software, but I don't think it's, unless I got to reboot my router. Uh, so I, so the story is a couple of months ago, I upgraded to a gigabit. So I have 1,000 megabits per second, but then you have to upgrade the router. So we upgraded the router. And then I bought Google Mesh, which was supposed to be the best whole house network. Because the house is big enough where a router can't cover our house, not even close. So they say if you have a big house, you should get 3 Google Mesh, right? 1 router and 2 points. So we have 5, and it's still not big enough to cover the house. And it just doesn't work very well. So Google did make a very good product, actually. So we have to reboot all the time, but it's not the internet. The internet's coming in, so you can test the internet speed. And even slow modems are pulling 700. But then the mesh drops. So the Wi-Fi drops, even though there's internet. So anyways, that's Google. And Google, like, you can get it to maybe the north side of the house and part of the second floor, but then when you go up another floor or the other part of the house, it doesn't do it. It just can't do it. Even though it's designed to do it, it just can't do it. So very disappointing. So I might have to reboot the router. No, 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 no. My house is very modest. Like my neighbor's house has 2 elevators. I don't have 2 elevators. Okay, so see, it's my internet. This should be hundreds. Yeah, that's terrible. Terrible, terrible, terrible. Orbi, Orbi. I'll Google that. Wait, I typed in orgy. Just joking. All right, so I don't know if that's any different. So I'll take a look at it. Yeah, but Sharif, you're not broadcasting around the world either. So this should be 320, not 32. So I'll have to reboot my router. That's true. So I'm pulling 32 on top of my stream. But even then it still sucks. Okay. All right, so kitty CAD. Let's take a look at CAD. Up means oil is falling. Down means oil is rising. Okay. Let's take a look at our previous analysis. Some people might call that a bottom. Now, if you believe oil is going to rise, you're risk on. If you're risk on, you believe this is going to happen. The best prices typically is using pivots. Oops, I wanted this to be blue. Is here and here. It's not perfect. It's more monthly than weekly. So, I mean, don't make a big deal about exact pivots. What you should be doing is looking for like psych levels. You should be looking really, first of all, price action. So we know up, 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 down, down, buy, 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 up, down, 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 up, sell. So at this point in here, I call it fib wars because bulls will probably still buy because that's their point, that's their job, this is what they think. And bears may enter and sell, and they're each going to do fibs. So for example, if a bull was going to do a 50% retracement, you know, they might go up, 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 down, down, buy, let's say, okay? And if a bear is going to do a 50% retracement, they're going to go down, 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 up, sell. And in the middle, everyone's going to get destroyed right in here because, right, there's so much going on. But a bear is going to start looking at things and say, if they get a lower high, they'll probably take a shot lower low. That's the thought process. If you're a risk on trader and you believe oil is going to go up as well, because you also need the dollar to weaken, which is risk on. You need CAD to strengthen, which would be demand for Canadian products, which would be risk on. Okay? So you need general risk on. Of course, oil prices going up would surely help. Don't call me Shirley. So let's take a look at this on a higher time frame and see what's going on. Currently, this is bullish. No matter how you want to look at it, we have a low, and currently our low is here. So technically, this isn't really bearish until we're like way down here. What do you think? So this is saying, if you had to guess, this would be risk off. Okay? So look at this. Up, 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 down, down. Oh, I have to do this thinner. Let's see if I can zoom in a little more as well. Nope, wrong one. All right, well, that was the best. All right, let me do this in pink. Let me thin this out a little bit. Okay, there's the bottom of the day. There's the high of the day. Then it faded back, low of the day, high of the day. Then it faded back. And so now we're thinking this. Okay? What do you think? And that would be risk off. So you would think, for example, Aussie yen down. Be the same trade if USD CAD goes up. Okay? You'd be thinking pound Swissy down, which would be the same as risk off. You'd be thinking Kiwi dollar down, which would be risk off. You'd be thinking, let's do Euro, ZAR. Which one? Up or down for risk off? Or you could do Euro try. Risk off would be up. Okay? All the same trade. All would be the same trade. So if you are risk on, you filter out all of this and say, there's no trade today. Not under these conditions. Okay? One problem that most traders have is they want to trade every day. I just want to make money. So if I look at the conditions and say, well, not really, then I take a walk. I go play in the sandbox. Okay? Okay? So your trading should make sense. I boil it down to risk on, risk off. I understand global macroeconomics. I understand funding currencies and money flow into projects and out of projects, into investments and out of investments. And you can take it further and match strong versus weak as well if you want, but that's a different methodology. That is relative strength, but you can certainly do it. So you could go to this and find something strong and find something weak. It just doesn't tell you what's going to happen later today and tomorrow. So you could say Kiwi dollar down. Do I even have it here? No. So I have to go to dollar pivots. Black Betty, bow, 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 bow. Kiwi, do I have a Kiwi here? Nope. Give me a Kiwi. Let's change Aussie to Kiwi. Bow, 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 bow. Oh, I can't even reach it out there. Whoa, back Betty, bam, 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 bam. Whoa. I think that's it, right? All right. So if you are a bear then on that because of relative strength, you're going to call this down for the day. So let's do weekly first. Weekly is not that helpful. So let's go daily. Template, day trading bearish. And you zoom in. Na, 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 na. Okay. And this is what you're doing. Down, 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 up, up. That's today's plan. Okay, it went out of position. So anyways. Okay. Well, the thing is, I think this could change. I think all of this could change. So, right? So I'd pay attention. If it's going to change, it needs to change relatively soon, though. Okay? Because I look at this and, I mean, I guess it's 4 hour. So yesterday's low is here. So we're still making lower lows, right? So here's yesterday's low. I guess I have to do this with the drawing tool. So let me go and let me make this fatter. Okay, so yesterday's low is here. So we're still below that. So you wouldn't buy something lower than yesterday, would you? Because I thought we only buy higher lows. We don't buy lower lows. So until the price action changes, right, this is bearish. We looked at relative strength and it seems to be bearish, but also technically it is bearish. It was bearish when we got lower than, yeah, I guess this was it here, right? We've been bearish since then. And if we find ourselves down near 60 tomorrow, then we'll still be a bear as long as we're below than that level. Okay? And we just keep shifting our, right? Which means like bulls at some point, like, let's say this happens. That's a little too fat. Let's say that goes up and then goes down. A bull would be very interested if they saw something like this over the course of a day or two. But it might take them a day or two to get what they want, to be a bull again. A day or two. Over the course of a year, that's nothing. But ask yourself, if you're kind of a break-even trader, where do you give back your profits to go from profitable to break-even? And I bet you it's in those periods where it's not really technically bullish anymore, but you keep buying because you hope it will go up. You think it will go up. But you're like, well, but technically it shouldn't go up now. You should wait until bears get out. You should wait till bears take profit and then get in on a higher low. Because all you do is buy higher lows. You don't buy lower lows. So this might be some support for you. I don't really care. Okay, but you need higher lows before you get in. So right now, technically, this is bearish. We also looked at it based on relative strength. In the moment, it is currently more bearish than bullish. It has been more bearish than bullish. And technically, it currently is more bearish than bullish. So at the very least, don't buy it. And if you want, if you're a bear, consider selling it. Let me ask one more time. Will you guys please click the like button? I'd appreciate it. All I'm asking for you to do is tell YouTube that this is quality content. I don't make money on it. There isn't going to be like some big bonus I'm trying to hit. I'm just saying, like, tell YouTube this is good stuff. Okay? This might be the only place on YouTube where I teach you how to get rich slow, like a normal human being, like the real world. Okay, if you need links to my template, like if you like my chart templates, the link is in the description below. A link to my book is in the description below. I'll link to my video training courses, which are currently 80% off, but that is ending like this week, right? If you need a trustworthy broker, the link is in the description below to tradersway.com. There's lots of resources. Rupee. I like rupees. What's wrong with rupee? Okay. Cool. So let's go through. We did exotics. We did some yens. We did some dollars. We did currency indices. I guess we need to do Bitcoin and gold. How many people want Bitcoin, gold, and oil next? How many people want Bitcoin, gold, and oil? Oil. We got one oil. No Bitcoin traders? Copa. We got some good subscribers with good song names. We have Copacabana and Black Betty. Someone's going to log in tomorrow, Flat Bottom Girl, I think. All right. Okay, so we had this 9,000 area lined up for a very, very, very long time. Since for forever, eh? So this is a big deal. So we've been going around the mean price for a very long time, but definitely, right, the slope has been wonderful. What do you notice about recently? Okay, so we got this going on. So we got your y equals mx plus b, right? M being the slope, b being the intercept. Okay, cool. And then you get a move from here to that line. So that's one negative standard deviation from the mean. And then you get an upper bound, which is one standard deviation above the mean. And what prices told us in the past, it doesn't predict the future, but it told us in the past, when you're one standard deviation from the average, it tends to revert back to the mean. And now we're one standard deviation above the mean, and it'll tend to revert. That's one thought. Plus, we had this identified as resistance a long time ago. I guess we got to go daily or something. Okay, and we just have this kind of monkeyed around here. Maybe it's right, maybe it's not right, but that's how we have identified in the moment. Let's go into a 4-hour chart. Okay, the next one obviously is here. So what we don't know is it ready to come down or go up to 10,000 and then come down? Following, right? So if you're a bull still and you're thinking 10,000, in fact, you can taste 10,000, then you think it's going to revert back to the mean, and then you think it's going to rise up to the next level of resistance. Okay? If you're a bear and you're like, that enough is enough, then you're going to think it's going to dip below the mean, probably retest the mean, and then do one standard deviation below the mean. Okay? So then you're going to fold in other theories of trading. So I'm going to go into a smaller time frame now, like an hour. And you're going to say, well, this is a monthly M3 resistance. This is a weekly M3 resistance. Oops, M3. And we are one standard deviation above the mean, which means all of this is resistance. So a bear this week is thinking essentially, oops, their plan is this, 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 and eventually down here for profit. And that should just, based on the math, just maybe be some sort of mean or standard deviation. So, you know, okay. What do you think? Well, it depends really if you're a bull or a bear. Do you guys want to do a survey? Are you guys a bull or a bear? Remember, risk on generally pushes Bitcoin up. Risk off generally pushes Bitcoin down. Are you a bull on the? Are we on our way to 10,000, or are we on our way down to, let's say, even? Are we on our way to 10,000, or are we on our way to 7,000? Type in an answer: 10,000 or 7,000. Someone else says back to the 50% fib. Well, it depends on where you're fibbing, but you're probably thinking 8,000. Okay, yes, we have halving in Bitcoin in May. You know what? I think it's so overhyped that if everyone thinks up, that down. So maybe there's a pop and then a serious drop. But no one knows when halving's going to be. But yeah, I have a feeling it's going to pop. And then everyone takes profit and this thing drops like a ton of bricks. So it goes up to 11,000 and then it drops to 3,500. Whoa! Everyone gets wiped out. That's not me based on some sort of knowledge. That's me just being a cynical, experienced trader. Oh, it's on the 11th. I thought they didn't announce the day of the halving. I thought it was like sometime in May. You'll know when you see it. Is that right? Tail says that halving is priced at. Well, that's what I mean. So people will ramp it up as we get maybe closer to the 11th, and then everyone will sell. And of course, when everyone sells, even if it's for an exit, the price will drop. Whatever. All I know is the vast majority of the people trading it probably don't know much about trading, and they're going to get caught with their pants down. Not that they're bad or anything. It's just, it's happened to me a few times, right? That we'll just call it a learning experience. When everyone is so certain that they're going to make money, and that's driving people to the market because they're like, oh my God, the halving. So everyone's buying. It went from 4,000 to 10,000, right? Or 4,000 to 9,000. We're up $5,000. Guess what's going to happen? Somebody's going to make a mistake and do the wrong thing. In fact, probably most people. So we'll see. I don't know. Remember, I'm not trying to get rich quick. I'm trying to get rich slow. Run this on slow and steady. Your trading should be boring. Every trade should be obvious. You should be surprised when you lose money. And it's not very exciting when you make money because that's why you made the trade you expected to. Okay? Anyways, let's take a look at gold. Okay? So we went from support back to resistance. I did not get the break. And we're in a range now. If I can get this to draw, I guess this is in the way. So let's drag this across. So now we lack trend. Well, actually, it's not true. The trend is just not up or down. The trend is sideways. So, which means as you approach this lower bound, okay, bulls can buy. Okay. And by the way, in a sideways market, what pivot point do bulls buy? In a sideways market, what pivot point do bulls buy? Any thoughts? And come on, guys, please click like. So many of you are not clicking like. It makes me scratch my head. What's going on? Please click the like button, guys. Tell YouTube this is good stuff. And I hope to see you guys tomorrow as well if you're new. No, 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 not in a sideways market, Raymond. In a sideways market, pivot point will be support 1. Okay? In a sideways market, bears sell at R1. So currently our market is defined by this range. Okay? Okay? You see that? So right now the upside is, let's say, 1725 to 1750. Okay? On gold. Okay? Does that make sense? Because the market is sideways. There's support. Here's resistance. Okay? And of course, to get these current pivots that I just pointed out, you have to look at the high, low, and the close to create a weighted mean, which is here. Okay? Then you look at the lowest low and you create a standard deviation from the weighted mean, which is here. You look at the highest high and create a standard deviation from the weighted mean, which is here. And then you look at the midpoints, which are here in here, which is equidistant from the weighted mean and the standard deviations. Okay? Which just says, here's support, here's resistance based on what happened last week. Okay? And since the weighted mean dropped from, right, because of this week's central pivot point closed lower than last week's central pivot point, this needs to move down slightly. Oops. Okay? So it's not actually using this, it's using, right, it did this first, then it recognized that the central pivot point dropped from this price to this price, so it sucked in that deviation and adjusted it for sentiment, really. The cool thing about pivot points, because it doesn't just do high, low, high and low divided by 2. See, high and low for the period divided by 2 gets you a central pivot of here, okay? But it's up here. So what does that do? It says, well, the week started down, it went high, and then it closed higher than the low. So the sentiment at the end of the week, actually it was here, the sentiment at the end of the week was bullish. The market opened low, went high all week, and closed high on Friday. Therefore, on Monday, it's going to be more bullish. So if the 50% is more like here, and because of the bullish close, sentiment pushed this up to here. So it's a weighted mean. And the way they do that is it's the high plus the low plus the close divided by 3 to get a weighted mean. And the weighted mean acts as market sentiment. Okay. So market sentiment to go for this week, we started high, we made a low, we made a lower high, we made a lower low, and we closed low. So the math says, what's the highest high? Here. What's the lowest low? Here. Where's the close? Close is much lower than we started. So it's going to move last week's central pivot point to and this week's down. So it said there's some market sentiment. Okay. Now in using now price action, you supersede that. Remember, none of my indicators tell me what to do. They just give me information. They don't make decisions for me. So I look at this and say, there is no market. I don't see a higher high. I don't see a lower low. So I don't really care about this other nonsense in the middle. I don't really care about the central pivot point. I don't really care about all this other stuff. Okay, the only thing that matters to me is if I'm a bull, I buy at support. That's all I care about. Where's support? Down there. And if I'm a bear, what do? I sell at resistance. Okay, so bulls buy low, bears sell high, and pigs trade in the middle. What happens to pigs? Bulls make money, bears make money. What happens to pigs? Pigs get slaughtered. Thank you very much. All right, so that's gold. Let's take a look at oil. Oil, WTI. My, oh my, WTI. Cool. So, looking at last week, this is the low. Here's the high. Here's the close. Central pivot moved up. Okay? Cool. Are we moving sideways? No. Okay? So we're not looking at it as sideways. We're looking at it from a bullish point of view. Now I can tell you right away, we've opened out of position. Okay? So this sets up an OP, an out of position, will then set up a counter trend. Okay? Which means it's hot. It's going to come up, it's going to hit resistance early, and there's going to be massive profit taking, leading potentially back to a central point. Okay? So let's try to figure out where that's going to be. Now, typically, we're hitting this. Okay? So I would say 22. That's pretty hot right now. We haven't seen 22 in a while. The other market says, you know what, trade it like it's range bound, sell it off at 20. So you really got two choices here. Remember, bulls only buy low. Bulls buy low at support, correct? Well, there's nothing here like that. A bull would be doing something like this. So they're not doing that, which means, guess what? There's dumb money in this market. What's going to happen is it's going to rally up. and then it's going to come down significantly. Maybe hard. That's one scenario. The next scenario, it goes up, comes down, comes up, okay? Or even better, let me redraw the pink one. This is the even better scenario. It goes straight up and straight down. So if we hit 22 on Tuesday, it's going to come down. Okay? It's going to come down hard into a counter trend, which means every sane bull in the world will take profit, and there'll just be no market. Okay? And I think really you got two choices, because this is really legitimate resistance. So you got, like, there will be a battle here. I stink. Okay? And then there's another one here. So what do you stink? Smell like a plan? Okay? Which means you shouldn't really buy it unless you're ridiculously aggressive and you're scalping your way up. And it would be a horrible idea to sell it now. Okay? Now, typically what you do for a bull is you wait for the 4-hour 21 to catch up. You let it move sideways, and then it pops. But it may not even wait for that. Okay? What would you like? What would you guys like me to cover next? I've gone 1 hour and 50 minutes today. I'm going to have to pull the plug soon. So in the last 10 minutes, let me cover something that you specifically request. I'd also like you to subscribe, like, maybe if you watch a recording of this, leave a comment. And like I said earlier, if you like my chart templates, the link to my chart templates are in the description below. A link to my book is in the description below. Link to my training courses, which are 80% off, are in the description below. A link to a trustworthy broker is in the description below. So please check out all those resources that are available to you if you're new to the group. I do these webinars every morning, 8 o'clock in the morning. Okay? So if you subscribe, you will catch an alert. So I hope you join the community of 14,000 Forex traders. I've been doing webinars on YouTube since YouTube was a startup. I think I have more than 5,000 videos on YouTube associated with my work. So if you're new, welcome. Where have you been? So let's USD peso, Noki, pound Swiss, pound Singapore dollar, huh? Okay. Euro dollar, I think we already did that. Singapore, maybe pound Swiss, pound Aussie. I guess we'll do Noki. Let's do just because let's switch it up. I think I have that in my energy complex scan. So since we did oil anyways, if we're thinking up and out of position, then Noki should benefit from that. So there's nat gas. All right. So in this case, okay, in this case, if you're thinking up on oil, this would be down here. Specifically, you'd have to do Brent instead of WTI, but they're highly correlated. So I don't know why I have Brent or WI twice. So let me change this to Brent. So now we got Brent. So if you think Brent is going to go up, and it's the same idea. If you think Brent is going to go up, go down. Okay, so you're going to have to analyze this on a smaller time frame. Okay, it's saying it's at the lower bound. It's 1 standard deviation below the mean, which means if we break below, this is probably technically significant. Okay, and you'll probably want to look here. This is the monthly M3, which is good for bears. This is the weekly M3, which is good for bears. So if oil does go up, if Brent does go up, and that's a risk on move, if risk on happens, dollar should weaken. If Brent goes up, Noki, the Norwegian krona, should go up as well, which means this pair would head down. So you got permission on the monthly pivots, you got permission on the weekly pivots, and your target in this case, if I can fit that in, your target, if you're trending, this week your target will be, well, let's call it 10. Okay. And the target for the month would be 9.8 to 9.7. So 400 pips down to 500 pips down. Somewhere, let's say 500 pips down. Maybe a little more, maybe a little less. US Singapore dollar, well, since multiple people have asked for Singapore dollar today, sure, I don't have it set as a standard trade. Keep in mind, the Singapore dollar is a basket of currencies. Okay? So that's a basket of currencies. So which one should we do? Well, I guess gold. All right, cool. So let's take a look at Singapore dollar. Ching dollar. Okay, sure. Come on. And it's a secret what's in the basket, but my guess is it's 50% British pound. Okay, so. Okay. Some of them do. Some of them do. But anyways, I'm working on a launch that will include it. So if it's not, you will soon anyways. Cool. So check it out. If you're thinking risk on, you're going to think, well, bullish. You want to identify what used to be support will become resistance. Okay. And then you're going to look at weekly pivot points, which are, this is the weekly M3. And now you want a lower high, lower low scenario. And that might be in the works right here, right now. So I would say somewhere in this zone, let me know, right? Somewhere around 142. Somewhere around 142, you probably want to get short. And you just tickled 85. So that was pretty close. So you should probably drop out of a 4-hour, get on a 15 or a 5. And you should be taking a shot or have already taken a shot. Okay. I think this might indicate that since that was such an obvious plan, that quite a few people were waiting for that retest. Remember, I said just shy, sell right below 142. So it got to 141.85 and then just dropped like a ton of bricks. Okay. So it seems to me a lot of people had that same trade plan. So now if you're lucky, I think you're going to get something like this. Okay. All right, so 50% of people just dropped out because we're covering Singapore dollar. So I guess that's the end of the day. And less than half the people had the courtesy to click like. Amazing. So thank you if you did. Thank you for being a member of this community. Thank you for being a client at Traders Way. If you are not a client, would you please visit tradersway.com and open a demo account like I showed you this morning? Open a demo account, pay it back, just as a way of saying thank you, just as a common courtesy for having them invest into your education up front so you can find confidence and skills to become a better trader. That's what they want for you. They want you to succeed because you'll end up being a better client. So it's realistic. At least they care about you. So once again, trading is a very difficult thing. Forex is a very unique thing. I'm glad we're going on this journey together. So, peace on earth. May the pips be with you. May your profits be above average. And if you're a subscriber, I'll see you tomorrow morning at 8 o'clock a.m. And if you're in my live trading group, I will see you at 5 p.m.